Today, Operation Anti-spruik, Episode 5. Hello again, it's Martin North from Digital Finance Analytics on this post, covering finance and problem news with a distinctively Australian flavour. Well, Cookie Boy's been at it again and he's pulled out a whole number of new prices where properties have actually been priced down quite recently. And we're going to focus today specifically on Western Australia because a lot of people have been sending me messages saying, hey, everything's going up in WA. Well, maybe, but this evidence would suggest something rather different is going on. So today we're going to walk through some WA postcodes, actually some in regional areas and some closer into Perth. And just before we start, a quick reminder that I use my core market model as part of this analysis. So essentially what I'm doing is taking information from our surveys, adding it to other information that we have available, and coming up with some views about what's going on down at a postcode level. We slice and dice the data, and that gives us a very specific focus down at that individual local level. And that means that we can apply our scenarios to the various outcomes from our model. And that allows us then to look down at a postcode level of the mortgage stress, the price trajectory, the buying and selling intentions, the migration and the economic data through the core market model, through the scenarios. And that then gives us a view down at the individual postcode level. And as always, you know, as I look at this information more, I realise it's becoming more and more powerful at the moment because there is a high correlation between mortgage stress, which of course I define as a cash flow measure, money in, money out, and the price cuts that we're seeing in many properties on the market. Now, I should say, of course, that this is taken from the information available via the portals, and it doesn't therefore give us much depth to what's going on. We don't know why people are selling. We don't know whether the property's got defects, etc., etc. All we can do is to take the superficial information off the portals, but when they actually advertise prices going down, it tells you something quite important. And just before we start, a quick reminder also that we do offer our one-to-one service, and that allows us to have an individual conversation with you about a particular suburb or postcode. I can't give specific financial advice, but I can certainly talk about my data, what I'm seeing, and look at the underlying trends. And I can look at stress, home price trend data, and some views as to where price trends ahead may go. Now, those trends, of course, are based on current information in my scenarios, and they will change. And it's possible to book a time for a call, either by Zoom or phone. It takes about an hour to have a conversation. And there is a cost involved because of the research that I'm required to do before I can talk with you. And we're also booking ahead about 3 to 5 weeks because we have quite a lot of interest in this particular service. But if you'd like to discuss that further, contact me via my blog. Links are below. Anyway, let's look at the first property. This is in postcode 6157. It's a 4-bedroom house. It's retirement living, it says, and it's on 450 square metres. And on the 14th of July, it was on at $699,000. Now it's at $669,000. That's as at the 20th of July 2022. Now, if we look at postcode 6157, this is PALMYRA. It's quite interesting just looking at the data because it shows us that there is a certain amount of stress in and around the postcode. Actually, rental stress is quite high. Mortgage stress is a bit lower, but overall 40% of households are in financial stress in this particular postcode. The price scenario is based on our best case scenario over 3 years is a rise of 11% for houses. The base case, which is my more realistic assessment, is down 12%. And the worst case scenario, which basically assumes that things go pretty badly wrong with the economy and perhaps internationally too, will be seeing a 30% fall. And I'll also highlight that gross investment returns in this postcode are around 4.1%. The net investment return is about 0.6%. Now, the next postcode we're going to look at is 6026 KINGSLEY. And here's a 4-bedroom property, 2 bathrooms, 2 garages on 617 square metres. It was listed 17 days ago. And at that stage, it was on at $695,000. Now, it's $669,000. So that's another considerable slide, actually, given the short amount of time it's been on the market. And if we look at that particular postcode, we can see there that 53% of households are in mortgage stress, 33% of renters are in rental stress, and overall households in financial stress. This is based on a cash flow measure. It's 45.7%. Our scenarios say that the best case scenario over 10 years is a rise of 10%. The base case is a fall of 13%. The worst case is a fall of over 30%. And the gross investment returns are 4.1%. The net investment return is 0.4%. The next property we're going to look at is in postcode 6065 LANDSDALE. And this is a 4-bedroom, 2-bathroom, 2-garage property on 450 squares. It was listed 71 days ago on the 13th of May. And the quote of $730,000 comes from the 17th of May. It now offers around $660,000, and that's on the 14th of July. So again, quite a considerable fall. And if we look at the data relating to mortgage stress, well, 72% of households in the postcode are in mortgage stress. Rental stress is at 62.7%. Overall financial stress is 71.3%. The price scenarios over the next 3 years are up. Best case scenario 6.4%. That's cumulative, of course. The base case is a fall of 17% and the worst case is 35%. And interestingly, the gross investment return is 3.7%, but the net investment return is 0.3%. So there is not much capacity there to make money on the investment property. Next property we're going to look at is postcode 6111 Royalston. And here's a property that was listed 91 days ago, 3 bedrooms, 2 bathrooms, 4 garages on 1,522 square metres. The best offer on the 26th of April was $699,000. Now on the 27th of May, it dropped to best offers over $650,000. And here's another house in postcode 6111, KELMSCOTT, listed 283 days ago on the 14th of October 2021, with 3 bedrooms, 2 bathrooms and 2 car on 761 squares. On the 14th of October 21, it was on at $319,000. On the 15th of July 2022, it's on at $290,000. Now we're going to look at property in postcode 6111 Camilo. And this was listed 81 days ago on the 4th of May 2022. 4 bedrooms, 1 bathroom, 1 car space on 959 squares. And that was listed on the 5th of May at $360,000. Now it's down to $329,000 as at the 21st of July 2022. And if we look at the postcode, we can see there that mortgage stress is at 45.8%, rental stress is at 58%, overall financial stress at 51.1%. And looking at the trend information, the best case scenario over 3 years is 8.7% cumulative. The base case is a fall of 15% over 3 years. The worst case is a fall of 32.9%. Gross investment returns 4.1%, net investment returns 0.8%. The next property we're going to look at is postcode 6102 at St James. And here was a property listed 172 days ago. That's in February 2022. And at the beginning of March, it was on the market at $699,000. It's now offers from $649,000 as at the 6th of May. And on this particular postcode, we see that mortgage stress is not showing. That's because there are not many households perhaps borrowing, but the rental stress is very strong. The rental stress is strong and investor stress is very strong. So the overall households in financial stress is also at 65%, which is a big number. And I will just highlight the fact that over the next 3 years, the best case scenario is a rise of 6%. The base case is a cumulative fall of 17.5%, and the worst case is a fall of 34.8%. Gross investment return is 4.2%. The net investment return is 0.1%. So it's not particularly flash. Now here is the next property. It's postcode 6164 and it's in Llandocket. 4 bedrooms, 3 bathrooms, 2 garages on 600 squares. It was listed 92 days ago on the 23rd of April. And on the 10th of May, it was listed at $699,000. Now it's $649,000 based on the 11th of July. And looking at the specific information relating to this particular postcode, we can see that mortgage stress is at 41%, rental stress is at 70%, stressed investors not too bad at 32%, but the overall financial stress measure for the households is 61%. And if we look at the trend data, 6.7% cumulative over 3 years is what I'm predicting at the moment based on the current information. It will change, of course, but that's what we see today. The base case is a fall of 16.8%. The worst case is a fall of 34.8%. Gross investment returns 4.1%. Net investment return is 0.8%. Next property we're going to look at is postcode 6059 Lantilly. And we're looking at a property here listed 198 days ago on the 7th of the 1st, 2022. On the 20th of May, it was listed at $659,000. Now it's $629,000 as at the 13th of July. And looking at the postcode, mortgage stress is at 56.3%. Rental stress is at 25%, not too bad. Overall household financial stress is 32%. As a result of that, the best case is a 14.1% rise in value over the next 3 years. The base case is a fall of 9.6% over 3 years cumulative. The worst case is a fall of 27% over the next 3 years. Now we're going to postcode 6160 Fremantle. And here it was listed 87 days ago on the 27th of April. 3 bedrooms, 2 bathrooms, 2 garages on 430 squares. It's a house. And the price was $695,000 on the 24th of May. Now it's offers above $600,000 on the 17th of July. And looking at the data for this particular postcode, the mortgage stress is actually not too bad at 22%, rental stress at 29%, stressed investors at 31%, and households in stress 30%. Overall, the best case scenario is a rise of 14.4% over 3 years cumulative. The base case is a fall of 9.4% over 3 years, and the worst case is a cumulative drop of 27.7%. But it's worth noting that the gross investment returns at 4.2%, but the net investment returns in this area are minus 0.3%. So it could well be that the value of the property is potentially now seen as not yielding well from an investment point of view. Now we'll look at this property in 6062 Morley. And this particular property was listed 110 days ago on the 5th of April 2022. On the 4th of May, it was on the market at $639,000. Now it's from $599,000 as at the 17th of July 2022. And here's another property in the same area, listed 121 days ago on the 24th of March. 3 bedrooms, 1 bathroom, 1 garage, 827 squares. And on the 24th of March, it was on at $539,000. Now its offers from $499,000 as at the 17th of May. Next property we're going to look at is 6062 Morley. And this property was listed 68 days ago on the 17th of May 2022. It's got 4 bedrooms, 1 bathroom, 2 garages on 461 squares. And this particular property was listed at $499,000 on the 19th of May 2022. But now it's down to $449,000 plus on the 15th of July 2022. And if we look at the mortgage stress data, 78% of households are in mortgage stress, 52% of renters are in rental stress. Stressed investors aren't so bad, but the overall measure of financial stress across households is at 54.3%. The best case scenario is 6% cumulative over 3 years. The base case is down 17.7%, and the worst case is down 35.1%. And from an investment perspective, the gross investment return is 3.7%. The net investment return is just 0.1%. The next one we're going to look at is on postcode 6055 DAYTON. And here, this was listed 83 days ago on the 2nd of May 2022. The offers were $640,000 on the 3rd of May. Now its offers are above $599,000 on the 25th of May. And if we look at the trends here, we can see that the level of mortgage stress and rental stress is not too bad. As a result of that, the best case scenario is a rise of 16.9% over 3 years. The base case is down 6.9%. And the worst case is down 25%. Investment return is 4%. Net investment return is 0.8%. Now we're going to postcode 6021, Balcatta. This was listed 53 days ago on the 31st of May. It's 3 beds, 1 bath, 3 garages on 675 square metres. And the price on the 13th of July was offers over $629,000. Now it's dropped to $599,000 on the 22nd of July. And looking at this postcode, we find that the borrowers in mortgage stress is at 42.4%, the rental stress is at 63.4%, stressed investors not too bad, but overall 49% of households are in financial stress. And the cumulative growth best case is 7.6% over 3 years. The base case is a fall of 15.6% over 3 years. And the worst case is a fall of 33.6%. The gross investment return is 3.8% and the net investment return is 0.4%. Next product we're going to look at is in postcode 6163, Spearwood. This was listed 74 days ago on the 11th of May 2022. 3 bedrooms, 1 bathroom, 2 cars, 365 square metres. And on the 13th of May, it was on at $479,000. Now, on the 15th of July, it's at $439,000 offers over. Now, the next property we're going to look at is Western Australian postcode 6163, Goollelal. And this was listed 75 days ago on the 10th of May 2022. The price on the 10th of May was $649,000. Now it's dropped to $579,000 on the 20th of July 2022. And if we switch across to the data from my model, we see that borrowers in mortgage stress are half, 50%. Renters in stress are very high as well. And the overall cumulative impact in financial stress for households is 68.1%. As a result of that, the best case scenario is a rise of 3.3% cumulative over 3 years. The base case is a fall of 20%. The worst case is a fall of 37.6%. And the gross investment return will be 4%, but the net investment return will be 0.4%. Now we're going to look at postcode 6056, Bellevue. And this was listed 73 days ago on the 12th of May. 4 bedrooms, 2 bathrooms, 2 garages on 1,500 squares. And on the 12th of May, it was listed at $590,000. Now on the 13th of July, it's on at $550,000. And if we look at the data, 40.7% for mortgage stress, 56.5% for rental stress, and overall households in financial stress at 51.3%. As a result, 9.4% is the cumulative growth best case scenario over 3 years. The base case is a fall of 14%, the worst case is a fall of 32.1%, and the gross investment return is 4.1%, the net investment return is 0.4%. Now the next property we're going to look at is in postcode 6107, Wilson, and this was listed 377 days ago on the 12th of July 2021. 3 bedrooms, 1 bathroom, 1 car on 812 square metres. And looking at that, on the 4th of August 2021, it was on at $588,000. Now, later in September last year, on the 11th of September, it was down to $525,000 and it's still on the market. Next property is in postcode 6107, Cannington. This was listed 93 days ago on the 21st of April 2022. 3 bedrooms, 1 bathroom, 5 cars, and on 398 square metres. It was on at $460,000 on the 26th of April 2022, and it's now down to $410,000 on the 13th of July 2022. Now we're going to look at postcode 6107, Kenwick. This was listed 143 days ago on the 2nd of March 2022. 3 bedroom, 1 bathroom, no car, and 682 square metres. On the 20th of April, it was listed at $349,000. Now it's at $299,000. That's as at the 20th of July 2022. Now here's another one in 6107. This is actually Queen's Park. This time, this was listed 130 days ago on the 15th of March. And on the 15th of April, it was on at $579,000. Now it's $519,000 as at the 16th of May 2022. Now, if we look at this particular postcode, we can see that the mortgage stress is at 67%, the rentals are 100%, the stressed investors are half at 50%, and households in financial stress overall, well, pretty much everybody is in difficulty in this area. As a result of that, the best case scenario is a fall of 2% over the next 3 months. The best case scenario is a fall of 2.5% over the next 3 years. The base case is a fall of 25.5%, and the worst case is a potential fall of 43.7% over 3 years. The gross investment return is at 3.8%, but the net investment return is 0.2%. Now we're going to look at postcode 6057, High Wycombe. And here, this property was listed 23 days ago on the 1st of July 2022. 4 bedrooms, 2 bathrooms, 5 cars on 519 square metres. And on the 13th of July, it was on at $479,000. Now on the 18th of July, it's down to $449,000 or thereover. The next product we're going to look at is postcode 6057. This is MAIDA VALE. And this property was listed 127 days ago on the 18th of March 2022. On the 19th of March, it was listed at $580,000. Now its offers in the region of $500,000, 16th of July 2022. 4 bedrooms, 2 bathrooms, 2 garages on 615 squares. And looking at the stress data, we can see there that the overall levels of stress are very high at around 50%. The proportion of households in financial stress are 43.8%. The best case scenario is a rise of 12% over 3 years. The base case is a fall of 11.6% over 3 years. And the worst case is a fall of 29.2% over 3 years. And the gross investment return is 4.3%, but the net investment return is 1.1%. Now the next product we're going to look at is postcode 6056, Midland. This is a 2-bedroom, 1 bathroom, no garage, on 999 squares. This was listed 465 days ago on the 15th of April 2021. And at that time, it was on at $490,000. Now it's $450,000 as at the 31st of May 2021. Nothing's happened since. And this postcode has 40.7% of households in mortgage stress, 56.5% of renters in rental stress, 51.3% of financial stressed households, and the scenarios are best case up 9.4% over 3 years, the base case down 14.4%, the worst case down 32.1%, and the gross investment return is a 4.1%, the net investment return is 0.4%. So what to make of all this? Well, I think there are 3 important messages. The first, that whatever people may be saying about Western Australia, there's plenty of evidence of falling prices now. In some cases, prices are falling quite quickly. Others are hanging around a bit, particularly in regional Western Australia, because the markets there are still very soft. The second is that there is a strong correlation between falling prices and high levels of mortgage stress. The way this has worked is that Cookie Boy has pulled out these properties, and then I've fitted my mortgage stress data to them afterwards. So it's not the case of going to highly stressed postcodes and trying to find properties to match. Rather, the properties come first, and then we match the stress to it. The third point I'd make is that we deliberately focused on properties here that were more affordable, because one of the other arguments that we were getting from a lot of people saying, well, the top end of the market's weak, but of course the middle of the market, the main part of the market, is still very strong. Sorry, that doesn't prove to be true here either. We are seeing weakness across properties that are actually in the more affordable range, and even some which frankly are pretty damn cheap, even on a national basis, let alone WA basis. $290,000 for a property is, well, cheap on any basis. I hope you found this useful. If you like these particular styles of shows, do leave a comment in the section below. And if you've got a particular postcode or area you'd like us to explore, leave that too. I can't promise we'll get to it because we've got quite a few to do, but from time to time we will post more of these. I think it's a really powerful way of showing what's going on the ground. And a final shout out to Cookie Boy, who did all the hard work in terms of looking at all of this data. I just put the show together. Bottom line is, if you think prices are still going up, you're probably kidding yourself. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.